Good morning, traders and investors. Roger Scott here. Hope everyone had a wonderful, wonderful weekend. It's Monday, it's August 21st, and it's about 7:52 in the morning. The market's going to gear up to open up in about an hour and 38 minutes to be as specific as I can with you. Now, this is going to be a very interesting week because earnings are coming to an end, but at the same time, we've got some retail earnings. And retail makes up 75% of the economy, about 70% of the economy. So it's going to be a very, very interesting week. First of all, let me tell you what's on the table. As far as earnings this week, you've got Zoom Communication coming out today. Tomorrow, you've got Toll Brothers, home builders, so we got to be really careful with home builders. Then you've got BJ Wholesales, you've got Dick's Sporting Good, more retails, Lowe's, retails, Macy's, retail, Urban Outfitters, retail. Then on Wednesday, you've got the Big Daddy, Nvidia. I can't wait to see how well they do and how the market reacts, especially how Nvidia reacts. But then you've got Advanced Auto Parts, ADI, a lot of chip stocks, home builders, chip stocks, and retail. Foot Locker, can't wait to see how Foot Locker does. Kohl's, but you get what I'm saying. Then Dollar Tree on Thursday, then Burlington, then Gap, Heinz, Intuit, a lot of retail, fairly broad, but a lot of retail. After this week, earnings are pretty much done as far as large cap stocks. We already have a good estimate of where the S&P stands, but we got to be really careful. Now, out of all of the stocks, I'm also, and by the way, I'm going to send this to you later today on my Telegram channel. Please, please, please like our channel, subscribe to our Telegram channel. The link is above or below this video. I don't know, depending on where you're watching it. Or you can go to rogerscott.com/Telegram. Also, make sure to comment below this video. I will respond to you there, okay? And if there's something you want me to cover, put it below the video. I'll cover. If there's something you don't like, put it below the video, and I'll read it and I will respond. So, as you could see here, this is all the major earnings. So I'm going to send you this via Telegram today and the earnings outlook, this, and this. And I'll also give it to you in my VIP room, which is available this summer for free, no cost. It's at noon today. Again, link is either above or below this video, where you can get a live 4-hour update of what we're talking about right here. So as you can see here, here's the expected volatility on Baidu tomorrow. Lowe's, Dick's. Nvidia is looking at 11% volatility. Can you imagine? It's like a $400, $500 stock. So it's expecting a 50-point move. If it doesn't get a 50-point move, the options are going to decay. So again, for those option premium sellers who don't think Nvidia is going to move 11% either up or down, or how about Peloton? Look at this, 20%. That's insane. But you could see here all the big. So you're going to get this in your inbox and in your Telegram channel. And you're going to get this, but you got to subscribe to Telegram. Now, another major factor I'm seeing right now in the market that's causing me indigestion is the bond market. Notice the bond market rallied a little bit, and boom, it's lower again. And it looks like it's heading towards that level right here. Now, remember, here's the problem I'm having. The problem is if you look at the futures today, remember, my job here is to connect the dots for you. If you look at the futures are up. That's because a couple of stocks, like a couple of tech stocks like Tesla, Nvidia, and PanW got upgraded today. But I'm hoping this will continue and give us some follow through because the bond market is telling us it won't. The bond market is not reacting that way at all. It's down. And if the bond market's down, it makes yield higher, and yield from treasuries causes interest rate sensitive stocks like technology stocks, to trade lower. So very, very, very important. Don't fall for the banana in the tailpipe and watch and see how the market closes or does towards the end of the day, because this is not indicative of a very strong market. One of the positive things about the bond market, though, is the utilities. As I mentioned, bonds and utilities are correlated because when bonds go down, interest rates go up. And when interest rates go up, people liquidate utility stocks and put their money in the bond market. But the utilities right now, this is the utility stocks trading above the 50-day moving average, and look at where we're at right now. So if this is correct, and if this is telling us we're going to have a bounce in utilities, that means we may have a good bounce in the bond market as well. You see how I'm connecting the dots? I'm using 3-4 unrelated things to make a relationship for you that may end up happening. And again, I think we're going to end up going to this line or maybe just above it, but we're already way, way overdone. The fact that we've gone this much from 103 to 92 virtually without any sort of a reprieve is not a positive sign, and the market is reacting to that. We've got a lot of Fed data this week. We've got real estate, home builders. The theme of the week is going to be semiconductors, home builders, and retail. Not in any specific order. Probably retail first, then semiconductors, and then home builders. But again, those are the three common themes this week. Existing home sales, new home sales, durable goods, jobless claims, consumer sentiment obviously coming in at the end of the week instead of beginning of the week where it would be most helpful. And then Mr. Jerome Wet Blanket Powell is going to speak. Again, keep your eye on the retail sector. The retail sector is coming off. Remember, I warned you about this. I warned everybody that we're seeing this, and market cap is declining. Now, let's talk a little bit about what to expect in terms of news, and then I'll get into the sectors and the nitty-gritty with you. So as you can see here, Nvidia gained over 1% pre-market. They were upgraded. A couple of other stocks were downgraded. PanW surged. They had good earnings. 12%. So tech is up today for news driven. It's not up that much because of whatever. It's up that way because of news. But the bond market is down, and the bond market carries a lot more significant weight than those two stocks on their own. Okay. So looking ahead to Federal Reserve Jerome Squirrely Powell's speech later in the week. It's happening on Friday. The S&P dropped to a 1.5-month low. Tech-heavy Nasdaq is now at a 2-month low. If this is a surprise for you, it means you haven't been watching my videos. In the coming weeks, we've got a lot of data. I've already mentioned home sales, existing home sales, new home sales, crude oil inventories, initial jobless claims, a lot of data. But again, the three biggest themes because of earnings, Fed data, and the Fed is home builders, retail, semiconductors. That's where you got to watch this week. Investors will be closely watching a speech by Squirrely Powell at the Economic Symposium on Friday, seeking insight into economic outlook and further trajectory of interest rates, which will go higher before the end of this year. There's now a 11% chance that they're going to raise rates in September, which means they're not going to raise rates, but there's a 32% chance that they're going to raise rates a quarter of a basis points in November. So again, it is going to happen, folks. Just because they're not taking any action right now doesn't really mean anything. Earnings front, this is what you got to be careful. Nvidia, Baidu, Snowflake, Tech, and then you've got retail, Lowe's, Macy's, Dick's, Gap. Remember, not that they have these big market cap, but people really focus on retail earnings. They can make or break a market. They really can. I've seen retail earnings do crazy things to markets. Investors digested a hefty drop. This is in Europe. In German producers' prices, while also waiting for Friday's speech by Squirrely. Energy and healthcare stocks are leading the market higher in Germany, and that's what seems to be going on over here. Right now, energies and healthcare are the strongest sectors, so they're actually piggybacking off of us. China closed lower again after central bank cut its key lending rate by a smaller than expected margin, while the country's sluggish economic recovery and property woes continue to weigh on sentiment. That's a big factor right now that's hurting our economy big time. Japan, stock index closed slightly higher, snapping a 3-day losing streak as investors cautiously followed significant losses last week, shrugged off disappointment regarding a modest rate cut in China. And again, stocks to watch today, Palo Alto, Nvidia, and you've got earnings on Zoom, you've got earnings on GDS, and not much else. Most of the earnings report started tomorrow with Toll Brothers, BJ, Cody, Dick's, Lazy Boy, Lowe's, a lot of retail. Now, looking at the stock sectors, if you look at the cumulative, you will see that energy, healthcare, Dow, financial, industrial, S&P 500. The fact that these blue chips are outperforming on a 3-week basis the S&P 500 is very good. I was hoping that consumer staples would rally. It's not yet, which is really bothering me. On a 1-week basis, chips and semiconductors rallied above, but this is very noisy. It's only the last 7 days, and we'll see if they continue leading. But in the last few days, chips, technology have been leading. Consumer discretionary has been on the bottom, but this is very noisy. I like the 3-week. Gives us a much better, smoother transitionary effect. You could see here semiconductors, technology, QQQ, small caps, consumer discretionary, communication. For the first time, I think in a year and a half, I see all of the speculative stuff together. I think this is really the first time this year. All the crap is together. Not crap, but the speculative stuff. Communication, the Googles, the Facebooks, the Meta, consumer discretionary, the Amazons, the small caps, the entire kit and caboodle. It's technology, semiconductors, and semiconductors. So, and notice real estate, consumer staples, industrial, financial, Dow, and healthcare, energy. They're actually making sense right here. And the fact that all of these sectors, 1, 2, 3, 4, 5, are above the S&P 500 is telling us that the S&P 500 is being weighted right now by technology, semiconductors, small caps, consumer discretionary, and communication. I really like this 3-week scan. It's good. But again, keep your eye on things because you could see here, this is where the strength is, and I expect it to continue moving in that direction because we're still in an inflationary market cycle. Now, folks, let me show you some levels on the SPY you need to pay attention to. All right, it looks like we're bouncing off of this level here. It looks like we're a little higher. Now, I don't like this. If we were up here and we saw a bounce like that, I would say this will hold off. This is very, very weak. Very, very weak. So to me, this looks like more of a bounce, opening higher and coming lower than a reversal. And the fact that the bond market is lower today isn't giving me any confidence that I'm wrong, okay? It's actually confirming that what I'm saying is true. Now look at the QQQ. You could also see it up here, but it's not up here. It's up here. And we've had several down days, and we're already below our first support level. We're now going to our second support level, and then we have one more. Honestly, in my opinion, maybe I'm crazy, maybe I'm wrong. I've only been doing this for almost 30 years come January. To me, this does not look like a reversal unless the earnings on Nvidia are so damn good that it's just amazing. And retail sales come out 100 times better than expected. I don't think that's going to happen. I hope it happens, but I don't think that's going to happen. I don't think that's on the table. I think this is going to huff and puff maybe for a day or two and then start coming down. This is too much of a developed downtrend in my opinion. This is not a simple pullback. This is a pullback right here. This is a reversal. So I think we're actually going to go lower because interest rates are going to go higher and things are not getting better in China. Now, let me give you the day trading stocks for today. They're actually large caps. Tesla's looking really good. There's no small caps that are rallying right now. Tesla's up about 7%. I would fade it. Honestly, I think it's going to open up, huff and puff, and come back down. I would be picking the highs on Tesla. You've got Nvidia, very interesting stock that's completely manipulating the semiconductors. Notice, been going down, not up. I don't think it's going to hold it, and I don't think earnings are going to be that great. I could be wrong, but the volatility is about 40 points. I think we're actually headed lower. I think this is the peak right here, and we're headed lower. I've said it for a while now. I think we're going to come back, fill this gap, and come down all the way here. So I'm expecting a little bit of a turn down, even though these stocks are doing magnificent this morning. The stock is up 2.5%. But again, I would be very careful, and I would be trading this to the short side. Another tech stock that got upgraded that's looking really good this morning, this sucker is up 26%. Now, what I like about this stock, it's actually filled the gap. So what I would do is I would wait for the first hour of the day, and then take the stock in the direction that it goes. And I'll review this in my VIP room today as well. To the downside, we actually have a little stinker here, NSSC. Napco Tech, the stock is only down 13%, and I think I would wait for half an hour after the market opens, and I would start bidding on the highs. If it's not near the highs, forget about it. Now, remember, subscribe to my Telegram channel. Subscribe to this channel where you're watching this video, and you'll get these videos first thing in the morning. And don't forget my VIP room, free, no cost. Link above or below, noon today. Before I let you go, folks, this is big. You know, I love Jeffrey Turnmeyer. He's a really good guy. Not just an amazing trader, he's actually a good guy. Jeffrey recently put up over 200 grand of his family's hard-earned money online in one trade. This is crazy. I know, it sounds crazy, even for a brilliant trader like Jeffrey. It's nuts. But he did it to prove how much confidence he has in his strategy that trades the most explosive asset in the entire world. If someone has the guts to put their money where their mouth is, especially that much money, I've got to see how it works. So Jeffrey's going to show me live in person on Wednesday. Today's Monday, on Wednesday, 2 days from now at 1 p.m. Eastern Time, and he's going to show you how it all works. Follow the link below. Save your seat. We'll see you soon. Don't forget, comment below this video, subscribe to my Telegram channel, and visit my VIP room at noon today. I'll see you later, and if you want to reach out to me, support at marketgeeks.com. I'm a lonely trader. Let me know how you're doing. Bye. I'll see you guys soon. Have a great day. Bye.